Hello, welcome to IGTV. This is your special look ahead to the week starting the 13th of November. And what a busy week it is. Of course, we've got that CPI number out of the US, which will be the centerpiece, especially after Powell's comments and that hawkish message. However, we also have the producer price reading out of Japan. Then on Tuesday, watch out for the consumer confidence number and the business confidence reading as well out of Australia, along with the unemployment rate in the UK. Also, Q3 GDP figures. This, of course, is the second estimate out of the Eurozone, so not as key, but it comes at a time when we've just got numbers out of the UK showing that it's managed to just about sidestep a recession this year. Germany also unleashes ZEW economic sentiment, which could move the euro. And we've got API crude oil inventories as well ahead of that OPEC outlook meeting later this month. Then midweek, we've got GDP growth rate numbers out of Japan. This is the Q3 reading, as well as industrial production and retail sales number out of China. Now, don't forget, we are counting down to Black Friday now, and especially Singles Day as well, which is now one of the biggest shopping events in the world. From the UK, consumer price index figures could give sterling some volatility. And we've got producer price, retail sales, and EIA crude oil inventories out of the US. And on Thursday, the unemployment rate in Australia will be quite interesting for those of our clients that trade the Aussie. And we've got import and export prices out of the US, along with initial jobless claims, industrial production, and the NAHB housing market index. Let's check in on Friday as well. Retail sales out of the UK and housing data out of the US. Baker Hughes oil rig count, that too will give us some indication of where the supply side for oil is headed. Now, let's cross over to Tom now in Chicago. Tom, of course, coming from Tastylive, part of IG Group. Thank you so much for joining us so early in the session. I guess the key thing in the US is the CPI figure. But, of course, like most things, volatility is the thing that leads the way for Tastylive. What are you watching?
I mean, we get excited about numbers like, economic numbers like CPI or PPI or unemployment, but not because we really care about the numbers. We get excited about the numbers because they create, heightened volatility on a short-term basis, and heightened volatility creates opportunity. So numbers to us are exciting only because they create uncertainty, they create a little bit of fear, and that means the markets, they perk up and prices get a little more expensive, so they become more interesting to us. So anything that creates a binary, event or a binary happening, which means just a one-off thing, that gets us as traders, a little hyped up.
What are your open positions at the moment? What are you trading?
Well, I'm a junkie, so I'm trading a lot. I probably have about 100 different open positions on, but I guess my biggest positions right now are, I happen to be long bonds, which hasn't worked out that well until the last week. But I've been long bonds, basically hoping that yields go lower. If you're talking about commodities, we are short some premium in crude oil, no directional bet there. And with respect to any kind of like basis or dispersion trade, we happen to be long the Russell here and short the NASDAQ. And that's a trade that we think is going to kind of have possibly have a little bit of reversion to the mean. We're through most of the earnings, so I don't have a lot of, the typical NASDAQ, like earnings or short premium positions on, but we're definitely looking for things that have been beaten up, through the earnings process, and maybe playing a little on the contrarian side to the upside.
Now, Tom, we had that hawkish message overnight from Jerome Powell, leaving the door open to perhaps another rate hike. There's been so much talk about the surprise behind the resilience in the U.S. economy. And in fact, I've just returned from Asia. Many Americans I met there as well, and also those that trade have been saying that this resilience has really, really been surprising. There are several schools of thought out there. Some people saying that pockets of rich Americans have been holding the economy up because they've cashed out. Others say that, it's purely down to the way the U.S. Financial system works. What's your call on this?
Well, first, I have a couple different thoughts. First of all, rich Americans rarely cash out. It's the only reason they're rich is because they don't cash out. I mean, especially if they're betting on themselves. So I don't buy that at all. But America has two really strong features that nobody else in the world has. One, it has a massive pool of liquidity, and liquidity begets liquidity, which means it just essentially it's kind of self-promoting in the sense that we just have there's so much capital available for innovation. There's so much capital available, and it fits perfectly into a very effective market structure. America has what we call like the challenge of efficiency. And in order for the rest of the world to compete with respect to, businesses and new money and that kind of stuff, and the reason the American economy stays so resilient is simply because there's a way to build businesses because of the flow of capital or the availability of capital. And there's a way for people that provide that capital to take their profits, if they're successful. So it's just it's a very productive cycle. And it's really what supports, American market structure is what supports the American economy and why it's so strong.
Interesting stuff. Well, I'm sure we're going to catch up with you when we get all that data out and more earnings and that CPI figure next week. Until then, take care, Tom. We'll patch in with you again. Let's check in on the corporate calendar because that's just as busy. We've got big names like AstraZeneca and WH Smith coming out. But on Monday, we've got British Land and BAE Systems out with a Q3 trading update. British Land out with first half earnings. And then on Tuesday, look out for Vodafone. That's the big one, along with Imperial Brands and Home Depot as well. Anything Home Depot says about the upcoming U.S. retail shopping season will be seized upon for any clues as to how that's going to pan out. We also have Cisco out with first quarter earnings and Target to add to that retail mood music. And finally, on Thursday, look out for Burberry, Siemens, Walmart, and also Gap out with Q3 earnings. So pretty packed week, lots of earnings still, and that US CPI figure. For more analysis, do find me on @IGCom or @Angeline Ong on Twitter. Otherwise, you'll see me on Beat the Street at 13:30 every weekday, and Jeremy Naylor at 7:30 for early morning call. This is IGTV.